Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the best stocks to buy and the latest stock market news updates that you need to know about. With that being said, go ahead and annihilate that like button right now, subscribe if you are new, comment down below your thoughts about any or all of these stories, and with that being said, let's get right into it. Recently, the stock market has surged, with the NASDAQ, the S&P 500, and the Dow Jones all being up recently, and particularly, we see the S&P 500 and the NASDAQ setting new records, which is great news for investors. But the news gets even better. When we move over to single stock news, we see that Netflix said that they will live stream a fight between the former heavyweight champion Mike Tyson and Jake Paul. Netflix said that this fight would take place on July 20th, which is going to give great momentum for Netflix's NFLX stock. For context, Mike Tyson is a very experienced boxer who has been retired for quite a while. On the other hand, we have Jake Paul, who was a YouTuber that has done a plethora of various things. As of right now, this event will be held in Arlington, Texas, at an AT&T Stadium, which can hold 80,000 seats. Now, the interesting thing about this is that Mike Tyson will be 58 years old, while Jake Paul is around 27 years old. Jake Paul also has a boxing record of 9-1, and he has been boxing for around 4 years. However, he has mainly fought people who are not professional boxers. But the real thing I want to focus in on here is not necessarily the people, but rather Netflix and their stock. Netflix is going to use this event to draw people in to potentially become a gigantic sports streaming platform. Netflix has been trying to dig into this particular segment for a while, and ultimately, this could give them a lot more eyes on their general platform, and this is going to reflect very positively in their share price. Some other quick stock news updates that you would want to know is in regards to the electric vehicle startup company named Fisker. Their shares have plummeted in their respected price to where now this company is a penny stock, but things got even worse for this company. Recently, a very popular gadgets YouTuber tore down and criticized this EV maker extremely heavily in regards to their Ocean SUV in a video titled, "This is the worst car I have ever reviewed." The critiques in this video were fair but extremely pointed, and here's what I mean. To quote straight from the article, which quotes directly from the YouTube video, the author had to say this: "You could give me this car and I wouldn't want to drive it." He also complained about the key fob, cameras, and many other things. However, he did compliment this vehicle in regards to its handsome physical appearance. But things get even worse for Fisker, and here's how. Fisker ended up making this worse by calling the dealership which loaned this YouTuber their vehicle. And naturally, the Fisker representative had some choice words to share with the dealership. However, this call was recorded, and then that recording was released on YouTube to where over 3.6 million people got to view it. So this has absolutely been catastrophic for Fisker and their share price, and I would love to hear your thoughts about this down below. Next up in the news, we have Novo Nordisk, which is a company that I personally hold in my portfolio, and they are absolutely raving about their weight loss pharmaceutical, to where they say it's even more effective than Wegovy. For context, you have three main competitors in regards to the newest and best weight loss pharmaceutical, and the companies which are in fierce competition with one another would be Eli Lilly, Novo Nordisk, and Viking Therapeutics. Overall, Novo Nordisk and Eli Lilly will be the largest benefactors here, so I'd love to hear if you hold either of these companies in your personal portfolio. Next up, let's talk about Amazon, which is another fantastic company which I personally hold in my portfolio, and their ticker symbol is AMZN. Recently, Amazon reported that they are halting their online storefronts in Switzerland, Ireland, and other countries in an effort to rein in their costs. I actually think that this is a good move for Amazon, but I would love to hear your thoughts down below in the comments because I am continuously buying this company and adding them to my portfolio. Next up, let's talk about entertainment stocks in regards to AMC Theaters, Paramount Global, and Disney. If you didn't know, AMC is the largest movie theater chain, and they have already experienced great profitability from their Stubs subscription, which they launched back in 2018. This subscription allows moviegoers to see 3 films a week for just $20 a month. On top of that, AMC has also streamed concerts within their movie theaters, and this has helped their top of the line grow pretty aggressively. However, we can't discount other entertainment companies in regards to Paramount and Disney, ticker symbol PARA and ticker symbol DIS. In my personal opinion, when we compare and contrast AMC, Paramount, and Disney to one another, Disney is the clear leader here. Therefore, I am not investing into AMC or Paramount, and instead I am using that capital to invest into Disney, because they have both the better company and the better stock. So I would love to hear your thoughts about AMC, Paramount, and Disney, because in the meantime, I'm going to keep investing into Disney stock as of right now. Speaking about companies that I'm investing into, let's talk about Palantir Technologies, ticker symbol PLTR. This company is a big data and analytics company which serves both commercial enterprises as well as government agencies. And this company also specializes in artificial intelligence, and they recently had a catalyst in the form of their AI Pecan. Lately, Palantir Technologies PLTR shares have been up around 2%, to where now they're trading at around $26 per share. But let me inform you that this company is about to experience some volatility in their share price. The reason for their upcoming volatility is because after their catalyst, which would be their AI Pecan conference, a Wedbush securities analyst increased Palantir's price target, which is great news for investors. The analyst which increased his price prediction for PLTR stock was none other than Dan Ives, which is a highly respected analyst. In my personal opinion, I was not expecting this. Apparently, Daniel Ives believes that Palantir can go even higher in their share price. Meanwhile, I said that the company could pull back in their share price, but only time will tell. I believe this company will dip to around $20 to $23, and that would give investors a good buying opportunity to get into this stock. However, it seems that Dan Ives believes that Palantir will continuously trend upwards in their share price over the next 12 months. So let's hear what he has to say. Daniel Ives wrote, "Our recent checks on Palantir in the field have been incrementally more bullish, as we believe the AIP Foundation is becoming viewed by many US enterprises as the launching pad of AI use cases." He goes on to say, "With the AI revolution now quickly heading towards the key use case and development stage, Palantir, with its flagship AIP platform and a myriad of customer boot camps, is in the sweet spot to monetize the tidal wave of enterprise spending now quickly hitting the shores of the tech sector, in our opinion." And this is why Daniel Ives reiterated his outperform rating on this company, which is great news, and he increased his price target from $30 up to $35. And remember, the company is currently trading for around $26 per share, so that implies a pretty healthy amount of upside. So I would love to hear your thoughts about this down below in the comments. Next up, let's talk about why Nvidia is trending downwards in their overall share price, to where they lost around 5.55% of their value, and I think it has to do with what Cathie Wood has recently said. The head of ARK Investment Management, who is Cathie Wood, said the following, and I quote, "The one place we could see a correction, and it's just a correction, we are not calling it the end of this at all, is in the chip space," end quote. By Cathie Wood saying this, it has scared some investors who decided to take profits on Nvidia's stock. For some background information, semiconductor stocks are among the best performing stocks so far this year, and the hype will have to decrease somehow or someday, so this scared investors, because when the CEO of ARK Invest says something, many investors decide to pay attention. Cathie Wood ended up giving justification for what she said earlier by saying that eventually demand and supply will reach an equilibrium in the artificial intelligence market. Cathie Wood is directly referring to the shortages in GPUs, which is exactly what Nvidia is known for. So once these shortages are dealt with and they normalize, this will cause a slight pullback in these particular types of stocks and companies such as Nvidia. So I would love to hear your thoughts down below about Cathie Wood of ARK Invest, and if you personally hold Nvidia in your portfolio. But we are not done talking about Cathie Wood just yet, because she seems to be buying up more shares of companies like Palantir Technologies, Toast, and Roku. Toast is a leading cloud-based point-of-sales platform provider for eateries, and it essentially allows you to pay through a handheld device. And then lastly, Roku runs their own streaming TV service. Now, what's interesting to me is that Cathie Wood is buying up these companies at new recent highs. For instance, Palantir and Toast, according to this article, hit new recent highs on Thursday. So it's interesting to see Cathie Wood purchasing more of these respected companies. Now, I'll tell you right off the bat, Palantir is clearly the big winner out of these three companies. All of these companies are rather risky, so I would encourage you to do your own research. But if I had to choose between these companies, I would rank Palantir Technologies as number 1, Roku as number 2, and then Toast as last. So these are the companies which ARK Invest is buying up and adding to their respected ETFs. So I'd love to hear your thoughts about all of those companies down below. But now let's move on and talk about Sofi Technologies, ticker symbol SOFI. Sofi Technologies is a fintech company, or a financial technology company that essentially operates as a digital bank. And I've held this company in my portfolio for quite a while now, and this company just got fantastic news. If you watched our last stock market news update, you would know that Sofi Technologies plans to offer $750 million worth of convertible notes, which are due in 2029. Overall, I said that this was not great news or bad news, but it seems that a Mizuho Securities analyst absolutely loves this idea, and here's why. Dan Dolev is the analyst in question, and he believes that as soon as investors understand the positives that surround this issuance, then this is going to increase SoFi's share price. As of right now, Sofi Technologies, ticker symbol SOFI, currently trades for around $7.70 per share. So if this $12 price prediction is correct, this company still has loads of upside left in it. I personally have been buying this company under $8 per share, and I would suggest that you do your own research on this company to potentially do the same. Next up, let's talk about Costco, ticker symbol COST, ticker name COST. Costco Wholesale is a membership-based warehouse chain, and recently their shares dipped, which is quite surprising. The news of Costco slipping by around 5% in their share price was rather shocking, considering that their financial results were actually pretty good. According to the report, the company generated total revenue of $58.4 billion, which equates to a healthy 5.7% year-over-year increase. But it seems that investors wanted more, and Wall Street was expecting more, so that's why investors were a little shaky. However, when we look at their bottom line, it seems that this company actually beat expectations. Costco's earnings per share, or EPS, was $3.92 per share, which was better than expected. And again, when we compare revenues to earnings, if they have to beat in one of these regards, you would want them to beat in earnings, which is exactly what the company did. But the company got even more good news, because their membership numbers were also very healthy. The company literally had 73.4 million paid household members, which was up nearly 8%, and moreover, their renewal rates for those memberships also increased. Therefore, this quote-unquote disappointment in regards to Costco's top of the line is extremely overblown, and investors are being irrational about this. Also, let me bring to your attention that this company has two catalysts in their pocket, which they could activate at any time, which will increase their share price. And here are the two catalysts. Catalyst number one, the company could increase their membership fee, because the company normally raises this fee every 5 years, but they haven't raised it since 2017. So eventually, when Costco does raise their membership fee, this is going to act as a positive catalyst for their share price, because they're going to bring in better top-of-the-line results. The second thing that Costco could do is that the company could raise their overall prices of their products. This will give them an additional boost of profitability, and it's going to act as a catalyst for their overall share price. And Costco can literally do these at any time. Therefore, the short-term volatility of the company falling around 7.64% in their share price gives investors a great buying opportunity, especially if you are a long-term investor. Next up, we have Snowflake in the news, which is a very prominent software data warehouse company. The reason why Snowflake is in the news, ticker symbol SNOW, ticker name Snow, is because one of their insiders recently bought up around 3,030 shares worth $501,314. In my personal opinion, I think Snowflake is overpriced right now, but I think they are a very fundamentally solid company. Over the last few trading days, the company lost around 25% of their value. However, there is good news here, because the cheaper this company gets, the better buying opportunity it becomes. For me personally, I would love for this company to drop below $145 per share, and once it does, or if it does, I will be buying more of them. However, there is something that you need to be aware of, and it's quite concerning. Out of the last 148 insider trades, we saw insiders purchase around 496,150 shares, so almost 500,000 shares were purchased. But clearly that's not the bad news. The bad news is that while insiders bought close to 500,000 shares over that time period, they actually sold around around 3.08 million shares. And that's why Seeking Alpha has a hold rating on this company, and I do too. So I'd love to hear your thoughts about Snowflake down below in the comments. Next up, let's talk about good news that investors need to be paying attention to right now, and it's in regards to 3M. The reason why 3M is in the news today is not only because they are an amazing dividend stock, but rather because they are choosing to spin off their healthcare unit as its own company. Recently, 3M's board of directors have approved a spin-off of the company's healthcare business, which is a great move in my opinion. This new spin-off business will be called Solventum Corporation, and this will occur on April 1st. This new company will actually be listed on the New York Stock Exchange under ticker symbol SOLV, which is great news. However, the news gets way better. This company will be utilizing 3M products at a huge discount, such as wound care products, healthcare information technology products, and biopharma filtration products. But again, the news gets even better, because for current shareholders in 3M stock, as of March 18th, they will be eligible to receive 1 share of Solventum for every 4 shares in 3M. Therefore, you are literally going to get shares in this new company by just holding 3M stock in your portfolio. Overall, I think this is a phenomenal news update. This is going to act as a positive catalyst for both of these companies, and I would love to hear your thoughts about this down below, and whether or not you personally hold a 3M in your portfolio as a dividend stock. Lastly, let's talk about the upcoming catalysts for the approaching week ahead, starting off on Monday, March 11th. On that day, investors need to be aware of earnings reports coming from very prominent companies such as Oracle and Asana. On top of that, online sports betting will be launched in North Carolina, which is going to act as a phenomenal catalyst for stocks like DraftKings, ticker symbol DKNG, FanDuel, ticker symbol FLUT, and ESPN Bet, ticker symbol PENN, as well as Caesars Entertainment, ticker symbol CZR. Next up, we have Tuesday, March 12th, and earnings will also be released from Kohl's and Workhorse Group on that day. However, you should also anticipate some volatility to happen in ARM Holdings, ticker symbol ARM, ticker name ARM. The reason why you would want to pay attention to ARM in regards to its volatility is because their IPO lockup period will be ended, and in general, analysts believe that the post-lockup sales could be absorbed by the market. But if not, this will impact their share price. Moving right along, let's talk about Wednesday, March 13th. Some notable companies which will release earnings results on that day would include Dollar Tree, Petco and Wellness, as well as Williams-Sonoma. However, I personally would rather focus in on Starbucks Corporation, ticker symbol SBUX, which is a very successful coffee chain, as they hold their annual shareholders meeting. Moving right along to Thursday, March 14th, you need to keep an eye out for Dollar General and Adobe, as well as Blink Charging, because those 3 companies are going to release their earnings results. And then lastly, on Friday, all day, you need to be aware that there is going to be a triple witching. Essentially, triple witching refers to a day when there will be simultaneous expirations of stock options, stock index futures, and stock index option contracts. Some people like to make a big deal about this, but honestly, you may not even feel it. But you should be aware of that it will take place on March 15th. So with that being said, go ahead and annihilate that like button right now. Subscribe if you are new. Comment down below your thoughts about any or all of these stories. And with that being said, I will see you in the next YT video.